Hello and good morning in Europe, good evening in United States. This is Aurora with another daily outlook video. As you know, in this series of video, we are watching at the market to see what happened yesterday, what is going on in the market, and what is our expectation for today's financial market. Yesterday, GOLT opening jobs and the Canadian Central Bank meeting, they were in the focus and in the spotlight. However, we had other news about the coronavirus and Omicron variant of that. We had some updates that current vaccines they can help them, they can secure the body against the new variant of COVID-19 as well. Sorry, I have some pain in my tongue also. So yeah, this we had these updates, and therefore the market was positive about that news. And as you know, yesterday, look if you check the market risk, as you know, this is a VIX, the market risk, and it was falling after this news and after this report, and against of that in front in SP 500, you could see that another raise. So SP 500 again rose above 4,700 and is still trading around same level. Nasdaq also was up for this news, and after following this news, the Dow Jones also had the same reaction. So the main indices they were up, all of them, after the positive data from COVID-19. At the same time, we could see the GOLT job openings at 11 million, more than, let me tell you the exact number. It was 11 million and to 11 million and 33,000. So let's say like that. So more than 11 millions open job, more than 11 millions of vacancies, open job, and we have these amount of the job opening. It means that the labor market is in a very good situation. That the labor market is positive, and we can be optimistic about the faster recovery in the labor market. Therefore, having with this increasing stock market, also we can see that the market is fine. And tomorrow tomorrow we will have the inflation numbers. If the tomorrow's inflation numbers also release better than expected, then we can expect the hawkish policies from the Fed for from its next week's meeting. Today we have to focus on today we have to in the United States we have to focus on initial jobless claims that will be published uh, later in the day. About the oil market and energy market, I can tell you that oil was increasing and getting the benefit, getting the advantage of coronavirus news. Therefore, for the oil market, we can see still the market is increasing and this uptrend can continue. We don't have any reason to see oil to be falling. That's about the oil market. Yesterday we had API, on the Tuesday we had the API inventory reports that shows that U.S. crude oil in the private section fell more than inventory levels fell more than 3 million barrels for the week ended December 4. Can I say like that, December 4. And for the same week, ended on December 4, EIA report shows that that crude oil inventories in the United States fell almost just 24,000, 240,000 240,000 barrels, much less than 1.7 million barrels that the market was estimating. So therefore, it could put the market under pressure. But however, market denied that report and increased because of, as I mentioned, because of better than expected news from the coronavirus, the Omicron variant, that the vaccines are working against this virus, and they can help to secure our body, secure our health. Therefore, the market was positive about that. So oil denied the API reports, EIA reports. But on Yesterday also we had, as I told, we had a Canadian Central Bank meeting. Canadian Central Bank didn't change anything in the policies. They did nothing in the interest rate, and they prefer to stay hold and wait and see for now for the last month in this last month of year. And any further decision will be next year. Therefore, the Canadian Canadian dollar was moving. It's just like if you look at the US dollar index, as the US dollar was a little bit weaker and then stronger. The Canadian dollar also same reactions they had. It had, however, with the better than expected, with very good data, very good improvement in the oil price, the Canadian dollar still is expected to stay stronger. So the dovish policies that could put the Canadian dollar in the weaker position, combined with the capped with the weakness in US dollar as well, and oil market price. So therefore, these all together they could balance the ways, just like the reasons that they could put the Canadian dollar under pressure, and the reasons that it could lift the Canadian dollar. They were against each other. Therefore, you can see the chart kind of balanced and in a side movement. However, yesterday, for the first time since last December, as you see, cable fell under 1.32. As you know, the last week we had many news about Mr. Boris Johnson, that the celebration that they had for New Year celebration that they had last year in street number 10, and he was denying the news that we didn't have such a celebration. Finally, he accepted and apologized against in front of Parliament. Anyway, sorry. Anyway, with the coronavirus, even if it's the Omicron variant is not as dangerous as Delta variant, but still, the number of new infected increased so rapidly in United Kingdom. Therefore, the government issued a new rules for wearing the mask in the most of public areas, as well as staying home, working from home, making a home office and stuff like that. So kind of it is the third biggest daily new infected in United Kingdom since the pandemic started. So therefore, all this news put again the pressure on the British pound. So we can see still the British pound on the very clear downtrend to continue. Therefore, those were the best, most important news. How Oh, I forget to tell about when I'm talking about the inflation. Don't forget that earlier today we had inflation data from China while we are waiting for tomorrow's UK United Kingdom US inflation. Tomorrow's US inflation. Today we had producer and consumers price index from China, sorry, CPI or Consumer Price Index inflation, consumer inflation increased 0.4% in November. However, it was 2.3% in the annual rate, which was less than 2.5% of expectations and in line with the Chinese central bank targets. A little bit more than 2%, it's 2.3%. So, but the PPI, Producer Price Index, in November increased by 12.9%, much more than 12.4% of market expectations, but a little bit less than previous month, which it was 13.5%, almost like 0.6% less than months ago. Therefore, the inflation situation in China is not bad, and it's kind of can be under control. Today from China, we have to wait for the new loans as well. The new loans will help us to understand the Chinese economy, how the Chinese economy is improving. It will be very, very, very important to watch. Those are the most important data and information that we have to follow for today. We don't have anything else in the economic calendar. Let me checking again. Yeah, I talked about the initial jobless claims. Yeah, this is the most important initial jobless claims number from United States after the Chinese number today. Okay, guys, it was so therefore. Based off this news, just reviewing the chart, USD index. USD index with this news till next week FOMC meeting, we are expecting to have a side movement around 96, a little bit up or a little bit down, waiting for tomorrow's actually inflation numbers, most importantly. And about the gold is still the same reaction it has, moving over with no direction, exact direction. For any future direction, we need to stay whole under 1778 or above 1800 to have a direction at the short time. For the midterm, it's still moving with no direction. About the oil, all told, as I mentioned, we are in a clear uptrend and it can continue. For the stock markets for SP 500, Dow Jones, and Nasdaq, mostly we have to have side movement before tomorrow's inflation number. Tomorrow's inflation number will tell us the market direction. Bitcoin and other cryptocurrencies, as you know, yesterday we had uh, the leaders of the cryptocurrencies exchanges kind of they have testimony in the law in a house. So they talk about mostly about the regulations and the needs of the regulations. However, there was some idea also, if we put more pressure on the regulation system, it may go. The US may lost its position in the cryptocurrencies market. Therefore, they were a little bit caution. So for now, we are not waiting to see any new law in cryptocurrency for the cryptocurrency market in the United States. And it seems like that the lawmakers, they need more time to to more time to think and before having any new rules in the cryptocurrencies market. Uh, this is yeah, they were kind of, while they were kind of worrying about the energy and clean energy and stuff like that. At the same time, as I told, they didn't want to lose the US leading in the cryptocurrencies market as well. However, the market was not positive. As I mentioned yesterday, we are still in a clear downtrend in the midterm and long term. We can see that the technical indicators also, they're supporting that. Fears and index moves around 25. Therefore, we don't have the reasons to see the cryptocurrencies market in upturn. Ripple, on the other hand, a little bit increased, almost all the way to towards 88 cents, 89 cents, as 88, 89 cents. Ethereum also in a side movement, but Bitcoin is falling. Totally, if the Bitcoin fall in the next days, the other altcoins also, they can follow the trend. About the currency market, I told you, yeah, euro, about the euro. Euro is in a side movement, and as I told, waiting. Yesterday also I talked about that. We will have the side movement for the euro USD around same levels that we have at currently. Waiting for tomorrow's inflation, next week's ECB and FOMC meeting. This is generally what is going on in the market. So for the euro, we are waiting to see the side movement around 1000, 1.13, 1.13, a little bit up and a little bit down. Okay, guys, thank you so much for watching this video. Let me know your idea, if you have any idea, if you want me to add something, or to talk about something else, about some more topics. Let me know in the comments. Thank you so much, and see you guys tomorrow. Bye bye.